Hey there, welcome to the channel. So today I want to take a look at FTX buying BlockFi. Okay, it was reported on July 1st, 2022 that FTX has signed a deal giving an option to buy crypto lender BlockFi. Okay, and so the price is 240 million. Now, when you read in the details, it's between 24 and 240 million, depending on some metrics that they're not telling us about. So let's look at BlockFi. Now, BlockFi, FTX is, another one of these crypto exchanges. BlockFi is one of these, crypto companies where you could basically loan your crypto out and they would offer you significant payments. They would, if you offer you interest on your crypto, et cetera, that type of a thing. Now, I assume that, okay, looking at BlockFi here, we can see that, like, I assume they're having the same issues that all these other companies are having. So you have the issues with Three Arrows Capital, you have the issues with these other crypto companies. Basically, they're getting lots of withdrawals. They don't have enough money to meet the withdrawals, et cetera. And so that's causing issues. Now, BlockFi, as of this point that I'm recording this, July 2nd, 2022, I'm not hearing any reports that they've blocked anything. But I assume that they're having some issue given that they're being bought out at a very low price. So really quick, interesting here. So going to the BlockFi website, you can see that there's some interesting big kind of capital in here. You have Coinbase Ventures, interesting. So is that related to Coinbase? Interesting. SoFi, they're in there. And then look at this, the Winklevi. The Winklevi may have had some kind of an investment in there. So there's a lot of people looking to lose a lot of money right now. Now, just to keep in perspective, that BlockFi back a little while ago, June 6th, they had a $1 billion valuation, which was a drop from the previous valuation. So they had a down round to raise money. So you could even tell that, they were having issues maybe even before this. Now, I want to look at FTX. Now, FTX exchange, looking at Crunchbase, this is the company. If you look over here, they've had approximately 1.7 billion of financing that they've had, and then they've had all these different funding here. So 1.7 billion overall raised, and then these are the investing rounds that they've had and the amounts that people have invested. So you can see here that, 900 million by Sequoia, 520 by Port Ontario Teachers Pension Plan. Oh, that's wonderful. That's really important to understand. A teacher's plan is in FTX, and FTX is doing the buying right now, but we'll get to this. I don't, this, once the dominoes start falling, they keep falling, and then we have SoftBank, Vision Fund, et cetera. So, and then look at Binance over here, was on an early round. And then one other thing I'll point out. So they only had 1.7 billion in capital available. Now they have some fund, and I don't know completely what the details are, but they've raised 2 billion for some kind of venture capital fund or single venture fund. So I don't know what that is. I don't know if FTX has access to that or if that's something independent kind of fund that they've raised money for. So now let's go take a look in more detail at this. So looking at this, so I want to highlight really the important ones. So the BlockFi funding rounds, there was a funding back in March, and this was the big one at a 3 billion valuation, $350 million went in, 3 billion valuation. Then we have this very recent one of 500 million. What's interesting here, look, 500 million, more money coming in at a lower valuation. But what this means is that, the value of the company. So the way it would work is that if you are investing pre-IPO company, what is the company worth? Well, the company is only worth what someone is willing to invest and pay at. So what happens is they basically agree to something like what the valuation is going to be. So they say, let's say $100 a share for 1 million shares. So that's $100 million valuation after the investment made. Okay, so that's what it is. And then you have a certain percent of the company. And then what happens is someone comes in later and say, well, no, I'm not going to value it 100 a share. I'm going to value it 50 at a share, but I need to put in more. So then they come in and say, okay, well, I'll value, I'll give you 50 a share, but instead of for 100 million, I'll give you for 200 or 4 million shares or something like that. And at the end result, it's actually diluting the original investors, and additionally it's devaluing the company because the shares, the value of all the shares are being knocked down by that investment. Now, why would an earlier investor accept some kind of a down round? Well, they would, because they're desperately hanging on to try to get something out of this thing, something of a small fraction of something is better than a large fraction of nothing. That's what it comes down to. So you can see that they had this down round, which just recently had happened. It's very not long ago, but yet things have gotten worse because here we are, July 7th. This is what the FTX is looking at. It's being reported that they're offering a $400 million credit line or whatever, and that this is going to be subordinate to what they're saying is subordinate to the traders, et cetera, et cetera. So what they're trying to do is it sounds like they're trying to basically give money so that they can basically handle redemptions from traders and people that have lent the crypto to BlockFi, et cetera. So they can try to get out of this without, defaulting and withholding transfers, et cetera. But the thing is, the valuation they're coming in is anywhere from 25 million to 240 million. So let's do some math. If you had invested at the $3 billion valuation, the value of the company went from 3 billion all the way down to either 25 million or 240. So look at that. If it ends up going through at 25 million, which could very well be very likely, given the fact that, most of the assets are based on crypto, which is still in decline, right? Given that that's the case, it's more likely this is going to go to the low end. Okay. So, that's a 99% loss on your money. And based on the video from Meet Kevin, it looks like he was one of these guys that put money in at this $3 billion valuation. So he got boned, really, really boned bad. Whew, what a mess. Now going forward, okay, this has all happened, but here's the thing. I love saying that. People give me a hard time, like, but here's the thing. So look, how strong is FTX? Right. So now we're into speculation. I'm not saying anything. I know nothing. I'm just speculating. And I think anyone would be asking this question. They have 1.7 billion of funding into this, into their company. So that's what they got to work with. They may have some venture fund with 2 billion that, maybe they can access some of that. Maybe they can't. I don't know. But if you're looking at it, this may not be available. But if you have 1.7 billion investing in a company that was at a $3 billion valuation, that had 1.7 billion, this had 1.7 billion invested, and this guy over here had total amount that BlockFi had invested was 1.3 billion. So basically, you had a 1.7 billion entity buying a 1.3 billion entity. So the point is, even though that this buyout price is really low, in a smaller fraction, you got to start wondering about the ability of FTX to survive, because all these companies are having issues, right? They're all having these issues. And I would assume that all the companies are facing withdrawals. And at some point, they all have done something to make money. They've all done something somewhere in the backroom deals to try to make money, to try to pay people interest that you shouldn't really have any way to pay them. And I would not be surprised they're the next one to fall. Because look at it. I mean, they are, it's significant portions of their money going out here. And given all the issues that are going on, I would just really wonder about this. And then if these guys go, this would be just an additional kind of a impetus for more problems. Now, if we go look at the chart, see, Bitcoin is still, declining. And if I look here, I can do some crappy technical analysis, and you can almost see that, like, you wonder if a W is starting to form here. And maybe there is, or maybe there isn't, but this line, there's no pivot point. So you have to let it finish. Yes, if it does pivot here, it could kind of form some kind of short-term support. But if not, it just keeps going. But the point really here is that I don't think we know all the damage at this point, because you've had such massive declines in this stock, in this Bitcoin, that it's probably done a bunch of damage that is still just filtering through the system. So let's go look at this. So just I'm taking to kind of the meat of the bars. You're talking about, call it a 72% decline, right? So when you have something that's 72% decline, and most of the assets that all these companies are dealing with, if you notice when they talk about this $600 million loan, $200 million loan, these loans weren't in cash. No one had the cash. These loans were all, and they specifically state, either stable coins and or a combination of stable coin and Bitcoin. So they're all all this is with funny crypto that is losing value as we speak. So see, the thing to understand is when now we're going to potential liquidation on Three Arrows Capital, what is Three Arrows Capital going to do? What are the receivers going to do? First of all, at some point, the receivers, like, it's going to get put in receivership, and the due diligence and the requirement, I would think, is that, you know, the lawyers in the company, for the lawyers for the company that is assigned the receivership, they immediately have to move to protect investors' interest. And that means that you liquidate all investments. And so you got to understand now, you have companies that now maybe they have no Bitcoin left. Maybe they have no stable coin left. Maybe they do. Maybe they don't. Maybe they still have $1 billion of stable coins sitting out there. The point that I'm getting at is when you're going into liquidations, as these things are falling, they have to liquidate the assets. So it means very specific things. It's like you have to start selling stuff. You have to start selling stuff. So I would think that given my experience with being on the receivership side, trying to like look to see what money is going to be left, if you were a judge and you were dealing with one of these companies and they still had, you know, like, let's say they had 200 million in Bitcoin laying around, given this chart and given the way it's going, I would assume the lawyers would be like, look, Your Honor, we want to immediately sell the Bitcoin at the current market price so that we can lock it in as cash, because we don't want to take any more risk with investors' money, right? So immediately, I would assume that they try to liquidate. So the point that I'm getting at is that behind the scenes of all these financial troubles is another wave of selling. There's another wave of selling. Now, I think that what you have is you have a smart wave of selling where, okay, this was already behind the scenes. There was a bunch of selling, but at some point, I suspect there's another wave coming. And so, you know, when that thing drops, you know, this thing drops into the 10,000, maybe it drops to that 5K, and that starts causing, like Kevin was saying, problems with one of the other stable coins, USD stable coin or whatever. This is not going to end. And it's not going to end because there's just too much risk out there, too much floating around. And, you know, we're playing a game of musical chairs. Now, maybe, you know, younger people don't know what the game of musical chairs is. What it used to be, we used to play this in grade school. I mean, it's kind of like, you know, dodgeball. We used to play dodgeball. You know, we weren't total pansies. Sorry. But, you know, like dodgeball is like, well, what do you do? It's like, okay, you know, you line up against the wall, literally against the wall in the back of the building of the school. And, you know, okay, people sort of, you know, split into two teams and people are throwing balls at you, red balls at you as hard as they can. And if they hit you, you're out. If you catch it, they're out. And it goes on until there's, you know, two people left and the final person wins the game. That's it. Musical chairs, you know, similar kind of situation, you know, classroom, 20 kids. Okay, 20 kids. We put 20 chairs and we all just walk around in circles as someone plays, you know, a record like Ring Around the Rosie or something like that. And then when the music stops, you have to sit in the chair instantly. And it's always kind of funny when it starts out. But what you do is you remove chairs. You remove chairs every round. You remove another chair. Next thing you know, and if you don't have a chair, then boom, you're out of there. And it gets down to the end where there's 2 chairs left and 2 people, you know, right. So there's always gets down to the end where there's 1 chair and 2 people. And then the battle is like who can get in the chair. So that's kind of what's happening. You know, the available space for companies to survive what's happening, it's shrinking as we speak. And part of the reason it's shrinking is because of this chart. You're looking at the reason for it. And I would speculate that it's not over. And therefore, the big guys that are trying to save things and trying to recover this, you got to ask the question, are they taking on too much risk and they're the next ones to fall? All right, that's it for this one. Bye.